Hello Wolfpack. Now Bitcoin has seen a rejection here. It's an evening star bearish candlestick formation, which is a formation that indicates a trend reversal. We have had a small little upwards trend into that, and that is a clear rejection. Even if you take out the fact that it's an evening star formation, you've got a spinning top formation there, candlestick formation. Very, very bearish. However, it might not be as bearish as people think, right? Because this might actually be a resistance support flip. Now that's the interesting thing I want to talk about in this video. I also want to talk about the weekly chart, and I want to talk it back and wrap it all up by bringing in the two scenarios that we've covered extensively in the past. So Bitcoin essentially had this massive downwards trend since November. We've been bearish on the market since 63K, or 66K I should say. 63K is when I initially said it was a bear market. Trended all the way downwards. We've had some consolidation and chop in the meantime. We had a bear flag formation here, which broke to the downside, right? And now we're heading downwards, and we can expect Bitcoin to continue downwards until it reaches, at a minimum, according to the 4-year cycle theory, the 200-week SMA, right? That's all evident. That's all clear. We've gone over that a lot in the past. We've gone over the reasons why the no blow off top theory is not relevant. We've gone over all of this stuff. Bitcoin's in a bear market. There's no way around it. What we're looking at now, what we're discussing in this video, and what we've been discussing for the last week or so is whether or not we can see another dead cat bounce from this region of support at 28.6K. Can we dead cat bounce here, or will we just drop below? That is a critical question. That's the question we're going to try and answer in this video, and we've got more and more evidence as this move progresses. What we had on Bitcoin was actually a descending triangle formation. Okay, we had the flat bottoms here. We had many wicks below it, of course, but we had the flat bottoms here at 28.6K, and then we had a descending level of resistance. We broke that to the upside. We immediately went into an evening star formation, which is very weird, and people are very, demotivated because of that, or whatever the word is, right? They have lost a lot of motivation in the market. They've lost a lot of interest in the market, and the market's kind of died off in the last 24 hours because this move that people thought was so bullish was not actually that bullish. That is why on the Wolves Crypto YouTube channel, unlike on other channels, we were telling you the objective facts of the situation. We were telling you the move is not valid until 32.6K is taken. 32.6K was not taken. Why 32.6K? Why am I so persistent about that level? That is the range, right? That is when we started, and when we entered this range, that is where we tested for resistance and we tested for support on the next day. 28.6K and 32.6K, that is the range for Bitcoin. Until we make a decisive move either up or down, there's no clear trend direction. We're kind of just trading the range and trying to understand what's going on within the range. So I told you guys, hey, this move, it looks promising, we've broken out, but don't get too ahead of yourself. We haven't actually broken out of the range yet, and we are still technically just going sideways. That is why we have avoided this drop here on Bitcoin, and we've avoided this drop on many altcoins. Now, what's next, right? Well, a lot of people, and the same people who wouldn't be trading the range, the same people who would have just bought the breakout and hoped for the best, the same people who got trapped on this move downwards, are the same people who are thinking, oh, this is terrible, this is bearish, when in reality, what I see here is a clean resistance support flip, and if we do see a continuation through green candles here, this actually could continue into a breakout above the range here. In my opinion, yes, we've seen an evening star formation, but I think it's a bear trap here. I think actually we look slightly more likely to swing upwards here and break out of the range to the upside. With all of that said, does it matter? No. I've made it abundantly clear, but it does not matter because you shouldn't be making any dramatic movements until the range is broken. So what I say within the range, it's kind of irrelevant, right? 32.6K, if we break that to the upside, you can start buying. 28.6K, if you break that to the downside, you can start shorting. That's all I care about. However, at this point, it seems to me that this is a bullish resistance support flip, and it seems to me that this might lead to a continuation out of the range. Let's wait and see, right? You have to consider a few things when kind of talking about this. One thing you have to consider, and this is a good thing to consider, is the fact that the weekly chart is in a crazy downtrend. We've seen 1, 2, 3, 4, 5, 6, 7, 8, 9 red weekly candles in a row, right? Prior to the last 3 months, we had never seen 7. We've seen 9, right? So this is a downtrend that is unmatched, right? We haven't seen a downtrend quite this extensive on the weekly chart for forever, right? But for a long time in terms of price, but in terms of weekly candles, forever. This is a history-making downtrend. And so at that point, when you look at something like that into a major support zone like 28.6K, you kind of have to be inclined to believe that there's going to be a reaction, right? There's going to be a bounce. Surely there's going to be a bounce. And we are seeing, it is early days, right? The weekly candle still has 3.5 days left, but we are seeing an inverted, bullish inverted hammer formation forming on this weekly candle. And provided we hold this price level for the next 4 days, that would be an inverted bullish candlestick formation, bullish hammer, which would actually lead to a reversal and a short-term continuation to the upside. So now that we've gone over that, what is the evidence supporting the fact that, hey, maybe we'll just break down here? Well, one of the pieces of evidence there is actually the traditional markets, the S&P 500, which is in a strong downwards trend. It's been in a downwards trend since January this year. And as that thing goes downwards, as the S&P goes downwards, as traditional markets tank, obviously Bitcoin has to tank as well. And bond yields are another thing that we need to be considering. Now we're getting closer and closer, not quite there yet, but we're getting closer and closer to the next interest rate hike, and bond yields are starting to rise once more, meaning, it's very, very likely we will continue to see those interest rates rise. We also see bond yields returning to levels we haven't seen since June 2019, at which point interest rates were significantly higher than they are now, which is kind of like the market's way of saying, hey, interest rates need to go up a lot more, they're undervalued, right? And obviously if that happens, there's more pressure on the traditional markets. If there's more pressure on the traditional markets, that's more pressure on Bitcoin. So, it's kind of a bit of a sticky situation Bitcoin's got itself into now. So I suppose if we go back to the Bitcoin chart, we can look at this now. We can say, well, okay, the TA isn't all too bad in the short term. The TA is, it's ranging. It's neutral technically. The TA is technically neutral, but I would be inclined to believe, hey, it's more bullish. But then you look at something like the traditional markets and you think, well, that's pretty bad, right? So it is one of those situations where we do have to kind of keep our eye on the charts, look at those two levels, that 32.6K level, that 28.6K level, and kind of wait and see what happens. But just be warned that, hey, the market right now on a surface level and what the TA is showing you on the surface level isn't really what, is going on, right? This evening star formation, lots of people will look at that. They'll look at that big red candle and think, oh, this is bad, this is bearish. Not necessarily, right? It could actually be a bullish reaction, a bullish retest of support. And, that could be it. That could be the end of the story there. That could lead to or materialize into a bounce. So let's wait and see what happens. Don't get overly bullish. Don't get overly bearish. We are in a neutral range. I would honestly consider this range more bullish than bearish. I would say it's more likely we break to the upside here. But honestly, I don't control the traditional markets. If the S&P 500 goes and has, a 5% correction in the next few days, that's a different story. Let's wait and see. Regardless, your plan shouldn't change. It doesn't matter if you're bullish or bearish in this range. As I said, it is a range. You need to wait for a confirmed breakout. Now, this is one thing I wanted to get into as well. Lots of people are trying to trade ranges, right? Even myself, right, as a career trader, I do this for a living. I personally don't even try to trade ranges, or unless it's a very, very, very critical range, and it's a very easy to define range, right, like a channel range. However, a horizontal channel range is not an easily tradable thing. And why is that? Well, you get major movements like this that no one could predict. We saw a breakout, right, and then we saw an evening star formation right after we jumped back down. Altcoins moved up 10%, and then the next day they moved down 10%, right? Is that a range that seems tradable? No. Ranges in general lead to that choppy price action. What you want to be waiting for is defined breakouts before entering positions. But I've covered that enough in this video. I've probably spoken about it half the video. Moving forward, I do want to quickly cover what could happen if we do see this breakout to the upside on Bitcoin. If we do see this breakout above 32.6K, again, you'd have to be waiting for it. If we do see it, what could happen here? Now, we do know what happens for the downside. The downside's pretty obvious. If we break to the downside on Bitcoin, that's going to be leading to a 24K Bitcoin up a 200-week SMA. That's well established at this point. What happens if we break up? Let's take a look. So we have a clear trend in the bear market here. This is typically how the bear market goes, and Bitcoin is following the trend in this bear market. But let's look at it. 2014, what did we do? Form the bull market top, right? We formed an uptrending line. We lost the uptrending line. We consolidated on support below the uptrending line. We bounced up and rejected off the 200-day SMA, and then we crashed down to the ultimate bear market bottom, right? It's a 5-step plan. You top out, form an uptrending line, consolidate on support, bounce back up to the uptrending line, reject off of it, consolidate on support again, and then crash down to the bear market bottom. The exact same thing happened in 2018, right? In fact, it was very, very similar. It's resembling exactly what's going on now, right? It's actually more defined than 2014. Bear market top, uptrending line, lose the uptrending line, consolidate for a bit, bounce back up to the uptrending line, reject off for 200, consolidate for a bit more, and then go down to the bear market bottom. We are doing the exact same thing in this bear market as we did in 2018 and 2014. So far, what we're doing, well, we topped out, we made an uptrending line, we bounced around on the uptrending line for a bit, we lost the uptrending line, we consolidated below the uptrending line, we bounced up to the 200-day SMA. We will most likely reject off of it. If we do that, we'll come back down, consolidate for more, and then ultimately go down to the bear market bottom in around November, October, or December, as per the 4-year cycle prediction. If we do see that bounce, and this is one of the reasons why I think it's more logical we do, if we do see that bounce, it will match up much better with the 4-year cycle theory. Because if we bottom out now, if we go down now, we break down from the next week, all of a sudden we're at the 200-week SMA and we're there, 5 months early as per the 4-year cycle. If we do this bounce and we take some time, we consolidate some more after it, that will bring us much closer to the expected date range in the 4-year cycle, right? Assuming we bottom out on 200-week SMA, which obviously isn't a given, right? We could bottom out much lower. We could actually go to 12K to 24. We could actually go to 12K to 14K. That's a possibility, especially if we have a global economic recession. But at this point, I've made this, I made you all well aware of this by now. We have only bottomed out on the 200-week SMA in the past, and so to predict anything other than that is investing against the trend. And as you guys would know, investors and traders have to invest with the trend until it ends. That's the number one rule of investing and trading. So the trend is bottom out on the 200-week SMA. At that point, we have to assume we will. And so if we go down right now in the next week, 200-week SMA is not far below us. We might get there within a month. And then we've bottomed out 4 months earlier than the 4-year cycle would recommend. So a dead cat bounce would make sense here, not only for reasons of TA, but also for reasons of timing in relation to the 4-year cycle. We have some time to kill here. According to the 4-year cycle, the bottom won't be in for at least another 5 months. We have some time to kick off here and we have some time to kill. And so Bitcoin could just do something like this bounce. Where could it go? Probably could go all the way up to 38K. Right, somewhere around 38K. It depends where the 200-day SMA is at that point, because again, we have to get rejected of a 200-day. And this scenario, I'll say it one more time, is only valid if we break above 32.6K, but that's what could happen. So I suppose, to end off the video and wrap up what I've said, yeah, we've had a rejection. Yeah, it's an evening star formation. It's bearish, but we do also have bullish aspects to it, like we are bouncing off of support here on resistance support flip, like we have a inverted bullish hammer forming on the weekly chart. It's not all bad. We still very much are neutral. We still very much are within the range. Now, before I end the video, I hope you guys will stick around for this. I want to give a quick shout out to myself, to BitGet, and to the Crypto Academy. So myself, first and foremost, Wolves of Crypto membership, Wolves of Crypto V.I.P membership. You can go ahead and click join there below this video. If you're on a PC, if you're on a mobile, you might need to switch to your PC. Go to the channel page and click join, and you can see all the perks you get for this. WOC Weekly, newsletter access, which I cover everything that's relevant in the market in a short PDF, 2-hour video on market psychology, prioritized reply to your comments, exclusive altcoin trading signals, custom emojis and badges, the whole 9 yards. Go ahead and check that out for a cheap price, 28 USD a month, an absolute bargain. Then we've got BitGet. BitGet Exchange, you guys know about it by now. I talk about it quite a bit. One of my favorite exchanges alongside Binance. I use this for futures because it has no KYC. And also, futures is available to Australians on this exchange and also people from the UK and Canada and the USA. And there is some harsh futures regulation going around on exchanges like Binance, and BitGet is the alternative to that, in my opinion. BitGet also has the lowest trading fees in the game. And I want to shout out this event here. It's having an event. KCGI event, the King's Cup Global Invitational, a trading event which you can win, or you can't personally win, but up to 200 BTC in prizes are available for basically trading and see how well you do. So that's pretty cool as well. Go ahead and check that out. And then the Crypto Academy, finally, if you want to take advantage of the bear market, the boring price action, this range we've had for a while, go ahead, make use of it, do something about it. Don't just sit there and stare at the charts, actually try and improve your skills, become a trader, a 10-unit course. Myself and Megawell Crypto, fellow analysts in the cryptocurrency scene, have created this course. Teaches you everything you need to know about trading, everything you need to know about finding trades, everything you need to know about cryptocurrency in general. Go ahead and check it out on the website, or just chuck us an email directly at cryptoacademycourses@gmail.com and we'll send you all the relevant information as well as the payment information. Thanks for watching, guys. Hope you enjoyed the video. I'll catch you in the next one. Cheers.